Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to bring you the market recap video for today, Monday, October 26th. You know what? Again, one of those weeks where we really don't have that much to talk about in the market recap video. We've had mixed earnings over the past week. You've had some activity last week with a couple pharmaceutical companies, which had an unexplained move back up in the market. It's about as crazy gets. I do want to point out a couple things right now. We're still in the process of coming into these resistance zones, 2040, 2050, 2060. I still don't have a bullish bias on the market. I'm still neutral in the marketplace until we see some type of confirmation, either above resistance levels or below support levels. As you can see, we're right here in that range of this old support level right there. If you track back it a little bit further back to this one, you've kind of broken out of the historical one between 2040 and 2050. Again, resistance, if you called it 2050, it's in that range between 2040 and 2060. You're starting to slow your momentum down a little bit, in terms of those downward upward movements in price. I do want to look at one stock in particular last week. This is Valiant Pharmaceuticals, which came out with some horrific news last week. Tremendous moves to the downside here in one day, went from 150 all the way down to $88 before hedge fund billionaires started doubling up on a losing proposition, which I felt was a horrific mistake. But that came out in the market, and all of a sudden the marketplace goes right back up. As you can see, there's this philosophy that last week in the market on the 21st right here, it was testing down, and then all of a sudden it comes right back up. Well, if you're looking at coming into today's price action, the one thing that I'm very, very interested in seeing here or analyzing is the volume. This volume, we only had 1.1 million lot sizes on the S&P 500 mini futures contract being traded today. That includes all the way from the Sunday open until right now, and you've had absolutely just no movement with there is no belief in this market right now, outside of 1 or 2 days of what I would personally consider illogical, irrational exuberance about this marketplace. And it's almost like this mistaken belief that the Fed isn't going to raise rates, that they're going to maintain quantitative easing forever. I mean, how long is it going to take? 7, 8, 9, 10 years? We've already been going 7, 8, 9, 10 years in the market. And so it's going to be interesting to what the Fed does here, which brings me into this week in the market. You got a lot of economic news this week in the market, and that's probably a little bit about why you really didn't see any data today. You had a couple minor housing misses today, but later on this week you got consumer confidence coming out tomorrow, durable goods coming out tomorrow, and then on Wednesday we got the FOMC. And so you're probably going to see a lighter volume going into the FOMC. I do not see them raising rates in October. I've said that for 6 straight weeks, and I just don't see a scenario where they actually raise rates in October. And that's kind of what the market expects right here as well. You also have New Zealand announcing monetary policy. They're supposed to maintain at 2.75%. And Japan coming out on Thursday night with press conference Friday early morning concerning the monetary policy out of the Bank of Japan, concerning the yen. All of those, especially the yen and the FOMC, are going to be the major news this week. And then you have some employment cost index coming out later this week. But this is a Fed-driven week with New Zealand, with the FOMC, with the Bank of Japan all announcing monetary policy. The big news coming out of last week was that of the Eurozone, where the Europeans, if we'll kind of go here and look at tackle trade, go to forexfactory.com. Last week in the market, you had the Europeans maintain their monetary policy at 0.05, but that wasn't the kicker. Although they kept it at an actual at the 0.5, they actually announced through Mario Draghi later in the week that they were going to look to lower into the negative interest rate, and perhaps in December of this year further the monetary policy of quantitative easing. And if you'll look at the euro dollar here last week, just got absolutely pounded after that announcement that they were looking to increase the stimulus of quantitative easing out of the eurozone, and saw 300 pip movement to the downside, finding support at 110. I was looking to go long on this one. Never confirms. I actually went short on the announcement. A very good trade on the downside, and that's why understanding economic reports are so important, is to put yourself always in a position to succeed. Looking at the S&P 500 this week, it's going to be a FOMC dominated week. It's going to be a earnings dominated week. Looking at the amount of companies that are announcing earnings this week, you got about 210 large cap companies or above, all announcing earnings. Apple, Amgen, Baba, Baidu, Ford, LinkedIn, MasterCard, Starbucks, Twitter, just to name a few of those companies that are reporting earnings. Obviously, the big one here is Apple, announcing earnings coming in here on the 27th after the market closes. That's going to be tomorrow night after the market closes. And Apple is really kind of the dog that dragged down the indexes today. If two things really kind of dragged down the indexes, it was Apple and it was oil. Let's kind of look here at tackle trading. Let's go to the Trade Center tab, and let's look at the nice little, where are you here, heat maps. We love our heat maps over there at tackletrading.com. Kind of gives us that bird's eye view over everything that's impacting the market. As you can see, energy really is the one that took the brunt, and then Apple down 3% today as well. Outside of that, you were kind of mixed in the market. Basic materials and Apple really kind of dragged down the market here, coming into the announcement on earnings tomorrow, which I think everybody and their dog is going to be watching tomorrow when the market reports earnings. But again, you have about 210 large cap companies. So this week, expect volatility, random movements, and earnings and FOMC announcements coming in on Wednesday for the dollar, for the New Zealand dollar, and Thursday for the Japanese yen. Outside of that, it's par for the course. We're looking at still some degree of uncertainty out there, I would say. I still believe it's important to protect those retirements long term. The markets has had a fantastic last month in the market, but I'm still looking to go short here, especially at this resistance level. With any confirmation on the downside, there's stocks that are currently bullish uptrends. There's stocks that are in bearish downtrends, and a vast majority of the market that is neutral right now. Looking at a couple of the other indexes, crude oil down again at a major support level. Nice little fake out, hit that $50 barrel. Inverted hammer coming back down. We called that one on the breakout to go into 50 before it fades down. You're now back down to support, trying to break that $44. It's currently at 43.73 with the average movement in the market in this ETF, or excuse me, on crude oil right about $1.70. That's within the zone of support. Look for that to if that breaks, I expect it to come down into 40 fairly quickly. We're still increasing supply of oil in the market, and there's still a decrease in demand. So we'll see if that $44 level can be broken. The dollar index, we called for a bullish stance last week on the dollar, and we got a bullish stance last week on the dollar. In terms of, especially last week coming out of the Eurozone with the euro and whatnot, really kind of led to the dollar coming back into this 96 mark. It is above the 96.5 level, which we've called as resistance in the past. I'm not going to give a take on the dollar until I do my Forex report later on today, but that is a slightly bullish bias on the dollar with the breakout of 46.5, but nothing would surprise me, especially with the Fed on tap. Gold here retracing back down into a support level right there. I actually like gold right here. I as well like silver up above that resistance at 15.5. I like silver above 15.5. Anywhere above 15.5, I like silver. If it drops back down under, I'm still not getting rid of it. I'm just going to continue to write covered calls on both natural gas, silver, and oil, as we've been doing for quite some time now. The VIX, as the market's going to go up, VIX is going to fade down, currently at 15.29. I personally would prefer the VIX at 20. I also Don't think the market cares much about what we care about. VIX at 20, we get to sell options for a little higher price, currently at 15.29. Still getting really good credits on those credit stocks out there as well. Looking at a couple ETFs here. Real estate coming into resistance right here has rebounded nicely at about 7-8% over the course of the last couple months. Look for that to kind of come back down into a retracement a little bit as well. So watch for earnings, watch for the Fed, watch for the Bank of Japan. Outside of that, keep on selling those options for cash flow. This is Matt Justice for Tackle Trading. If you like what we're doing over there, make a comment on the video, make a comment, share it with your friends. But get in the game one trade at a time, tackletrading.com.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.